Good morning, everyone. You're welcome to today's class. In our class today, we shall be taking the chapter 2 of this course, preparing task computations. And the topic of this course today is general administration of tasks. General administration of tasks. In our last class, we discussed the introduction and background to taxation, under which we give some definition of terms. We define what tax is. Essentials of a good tax system was discussed. The tax court was also explained in the class. The Nigerian tax system, as well as the historical background of taxation in Nigeria, is taken. And a brief history of the introduction of taxation in Ghana was discussed. The objectives of taxation, principles of taxation, classification of taxes were all discussed in our last class. And also we discussed the sources of tax laws, the distinction between taxes and levies, the basic concepts in taxation, goods and services are taxed in Liberia. In short, we discussed the benefits accruing to the individual taxpayer that do not necessarily have to be commensurate to the amount of tax paid by individual. And tax is defined as a compulsory levy imposed by the government for the purpose of meeting the cost of governance. So in today's class, we will be taking the structure of tax administration in Ghana, the composition and duties of revenue agencies in Nigeria, tax administration and procedures in Liberia, tax collection in Nigeria, objections and appeals, the position in Nigeria and the position in Ghana, as well as Liberia. Also, we discussed the offenses and penalties, the position in Nigeria, returns, the position in Nigeria, and the pre-operational levy will be discussed in Nigeria. Types of assessments in Nigeria will be discussed. Tax clearance certificate procedure will be discussed. That is the collection of tax clearance certificates will be discussed. Ethical issues will be discussed in brief. Payments of minimum tax will be discussed in today's class. The structure of tax administration will also be discussed. Okay, so you guys are expected to understand the structure, composition, and duties of various organs of tax administration in Nigeria, Ghana, and Liberia. Techniques of tax collection. And also you should be able to explain the procedure for raising objections and appeals and the offenses and penalties applicable for all types of taxes. Are we together both in Nigeria and Ghana, as well as Liberia? Are we together? Okay. So a tax system comprises of tax laws, tax policies, and tax administration. A good tax system comprises of tax laws, tax policies, and tax administration. To achieve effective administration, there is a need for efficient organs of tax administration in any country. Are we together? Okay. So to achieve this, there is a need for efficient organs of tax administration in any country. Because where we have tax laws and tax policies, it is important that we have an effective and efficient system in place to administer or for an efficient administration of the tax laws and tax policies. Are we together? So now let's look at the structure of tax administration. Structure of tax administration. So we are starting with that of Ghana. In Ghana, the Revenue Agency's governing board is the central governing board for the revenue agencies, comprising the Internal Revenue Service, the Customs, SIs and Preventive Service, and the Value-Added Tax Service. The Revenue Agency Governing Board is governed by the Revenue Agencies Governing Board Act 1998, Act 558. Unlike what we practice in Nigeria practice a decentralized administration of a decentralized system of administering taxes. Okay, yes, in our last class we discussed that in Nigeria we have, at the federal government level, we have the Federal Inland Revenue Service. So each tiers of government in Nigeria has their own administrative body. So for the federal government, we have the Federal Inland Revenue Service, and for the state government, we have the State Internal Revenue Service. And for the local governments, we have the Local Government Revenue Board. Okay, so we have the Local Government Revenue Board, and we have the State Internal Revenue Board, as well as the Federal Inland Revenue Service Board. Are we together? So, but in Ghana, we have just one body known as the Revenue Agencies Governing Board. Okay, so there's nothing like the Local Government Revenue Committee. Okay, now this this governing board has what? As the Internal Revenue Service, the Customs, SIs and Preventive Service, the Value-Added Tax Service. So we have just what? We have three body or three different board or service under what? Under the central governing board. Okay, so now let's take this one after the other. Who are the members of the Revenue Agency's Governing Board? The Revenue Agency's Governing Board consists of the chairman, the governor of Bank of Ghana, the executive secretary of the Revenue Agency's Governing Board, the commissioner of the Customs, SIs and Preventive Service, the commissioner of the Internal Revenue Service, the commissioner of the Value-Added Tax Service, and a representative of the Ministry of Finance, a representative of the Ministry of Finance, not below the rank of a director. A representative of the Ministry of Finance, not below the rank of a director, and 4 other persons, at least 2 of whom shall be women. Okay, so in all, we have what? We have 11 members. Okay, we have 11 members of what? Of Revenue Agency's Governing Board. So we have 11 members that consist the Revenue Agency's Governing Board. So the chairman, governor of the Bank of Ghana, executive secretary of the Revenue Agency's Governing Board, the commissioner of Customs, SIs and Preventive Service, commissioner of the Internal Revenue Service, the commissioner of the Value-Added Tax Service, a representative of the Ministry of Finance not below the rank of a director, and 4 other persons, at least 2 of whom shall be women. Now let's take the functions of the Revenue Agency's Governing Board. The functions of the Revenue Agency's Governing Board are as follows. One of the functions is to ensure supervision and coordination of the activities of the Internal Revenue Service, the Customs, SIs and Preventive Service, and the Value-Added Tax Service in the performance of their duty, in the performance of their functions under the Internal Revenue Service Law 1986, PNDCL 143 as amended, the Customs, SIs and Preventive Service Management Law 1993, PNDCL 330 as amended, and Value Added Tax Act 1998, Act 546 as amended, respectively, and under any other enactment. Also, one of the functions is to cause to be prepared plans for developing and maintaining an effective, fair, and efficient revenue collection system and ensure that the plans are implemented. Also, they are to ensure the restructuring of any of the revenue agencies as and when necessary, to also ensure the effective, efficient, and optimum collection of taxes, penalties, and interest due to the state under the enactments establishing the three revenue agencies and under any other law. To direct generally the revenue agencies on revenue-related policies, to monitor the performance of the revenue agencies in carrying out their functions, to ensure that all amounts collected by the revenue agencies are paid into the consolidated fund unless otherwise provided by an enactment, and also to recommend to the Minister of Finance measures for effective collection of taxes and non-tax revenue, to delimit customs and surveillance zones, approve routes for customs purposes, and cause to be built and manage government warehouses for the purposes of revenue collection. Also, their function include to cause systems to be developed and maintained, whether by computer or other means, for coordinating and supervising the collection, storage, and retrieval of information. Please note that the functions of the Revenue Agencies Governing Board is not limited to the 10 mentioned here, okay? Among other functions are to arrange for the training and manpower development programs for employees of the revenue agencies, to establish a system for the exchange of information among the revenue agencies, to initiate and sustain programs for public education on tax payments. Are we together? So now let's look at the Commissioner of Internal Revenue Service. What are the functions of the Commissioner of the Internal Revenue Service? The functions to be performed by the Commissioner of Internal Revenue Service includes: one, to administer the Internal Revenue Act, But before that, it's pertinent to know who the Commissioner of Internal Revenue Service is. The Commissioner of Internal Revenue Service is the head of the Internal Revenue Service and shall be appointed by the President in accordance with the advice of the Internal Revenue Service Board, given in consultation with the Public Services Commission. Again, the Commissioner of Internal Revenue Service is the head of the Internal Revenue Service and shall be appointed by the President in accordance with the advice of the Internal Revenue Service Board, given in consultation with the Public Services Commission. So, among its functions are to identify taxpayers, to assess taxpayers to tax, to collect taxes, penalties, and interest due to the state, to pay into the consolidated fund monies collected on behalf of the state. Are we together? So, for instance, the function to administer the Internal Revenue Act is done by the Commissioner through seeing to ensure that provisions of the Act are carried into effect and complied with. Okay, so to ensure that taxpayers are determined, okay, or are identified, and ensure that they are roped into the tax net. Okay, so he also has to ensure that taxpayers are served with the relevant assessment based on the taxpayer's earnings and capacity, as well as the category in which the taxpayer falls. Are we together? Okay, so if that is taken, let's move to the powers of the Commissioner of the Internal Revenue Service. Powers of the Commissioner of Internal Revenue Service. To enable the Commissioner of Internal Revenue duly carry out the functions assigned to him or her, as mentioned earlier, he or she is empowered to facilitate the execution of the functions. There are powers that are exclusive to the Commissioner of Internal Revenue. That is, these powers cannot be delegated as they are the preserve of the CIR only. Who is the CIR? The CIR is the Commissioner of the Internal Revenue Service. So these powers are as follows: the power to remit taxes, penalties, and interest, the power to exempt a person from the 5% withholding tax on contract payments as provided for under Section 84, subsection 4, subsection B of Act 592. Also, he has the power to determine whether the appropriate tax to be paid by a taxpayer in respect of capitalization of profits has been paid, and the power to determine whether a company controlled by not more than 5 persons have distributed a reasonable part of its income as dividend. This is to enable the CIR invoke Section 45 of Act 592, which governs undistributed profits of companies. And lastly, the power to compound an offense other than to the solicitor of the service. So the other powers that the CIR possesses can be delegated to senior officers of the service authorized by the CIR to enable them fully carry out their functions. So these other powers includes, but are not limited to, the power to summon witnesses, the power to prosecute in the courts, the power to determine objections, the power to collect taxes by distress, that is, by seizing property to recover tax, the power to garnishing monies due to taxpayers, that is, orders a third party to pay amounts due to the taxpayer directly to the Commissioner of Internal Revenue Service. Are we together? So also the power to enter premises, search and seize documents and items, the power to extend time to furnish returns, the power to appoint a person to prepare and furnish a return on behalf of a person who has failed to furnish a return, and the power to adjust the chargeable income of a person in tax avoidance cases. So the listed powers, okay, they are just like I mentioned earlier, that other powers that the commissioner possesses and that can be delegated to senior officers and are the powers to determine objections, power to summon witnesses, and the likes. However, there are some powers of the CIR which can never be delegated, okay, or let me put it this way, which can be delegated to only officers, okay, only officers of the rank of senior inspectors, senior inspector of taxes, up to deputy commissioners of Internal Revenue Service. Are we together? Again, notwithstanding the above listed powers that can be delegated, okay, so there are certain powers that cannot be delegated to senior officers, but can only be delegated to officers of the rank of senior inspector of taxes up to the deputy commissioners of Internal Revenue Service. And these powers are the power to extend the due date for payment of taxes and varying tax installments, the delegation of powers other than the exclusive powers of the commissioner, and the power to authorize an officer to exercise the audit, search, and seizure, or to demand the production of information. Are we together? So the Commissioner of Customs, SIs, and Preventive Service. The Commissioner of Customs, SIs, and Preventive Service. Who is the Commissioner of Customs, SIs, and Preventive Service? The Commissioner of SEPS, that is the Customs, SIs, and Preventive Service, is the head of the Customs, SIs, and Preventive Service and performs the following functions. He is responsible for the day-to-day administration of the service. He is responsible for the day-to-day administration of the service. He has the responsibility, okay, to collect duties, taxes, and penalties due to the state and the payment of the amounts collected into the consolidated fund. He pays the amounts collected into the consolidated funds. Now let's take the powers of the Commissioner of Customs, Excise and Preventive Service. The powers of customs, or sort of the Commissioner of Customs, Excise and Preventive Service. The SEPS management law, that is the the Customs, Excise and Preventive Service Management Law of 1993 has provided the Commissioner of SEPS with the following powers to enable him or her further carry out the functions assigned to him or her as stated above. One, we have the powers of police. Yes, all officers of SEPS have the same powers, authority, and privileges as are given by law to police officers. And also, power to search persons. Any officer of SEPS may search a person he has reason to suspect is carrying or has any unaccustomed or prohibited goods or exercisable goods on his person or his or her possession or in his or her baggage, the duties on which have not been paid. Again, the SEPS Management Law of 1993 has provided the Commissioner of SEPS with the following powers to enable him or her further carry out the functions assigned to him or her as stated above. One is the powers of police. Yes, all officers of SEPS have the same powers, authority, and privileges as are given by law to police officers. Two, power to search persons. Any officer of SEPS may search a person he has reason to suspect is carrying or has any unaccustomed or prohibited goods or exercisable goods on his person or in his or her possession or in his or her baggage, the duties on which have not been paid. It should be noted, however, that a female shall be searched by a female. Furthermore, no officer shall be liable to any prosecution, an action or suit on account of a search made in good faith and in accordance with the provisions of the law. Also, officers of SEPS have power to seal off premises, buildings, which are suspected to be harboring, keeping, or in which are concealed or being kept unaccustomed, prohibited, restricted goods, or goods on which excise duty or input VAT have not been paid or secured by certificate. Also, officers of SEPS have power to stop ships, aircraft, or vehicle upon reasonable suspicion that any unaccustomed, prohibited, or restricted goods or any goods on which duties or taxes have not been paid or secured by certificate are loaded. They also have the power to board a ship or aircraft within Ghana to conduct a search, request for books or other documents which ought to be on board. Also, they have the power to arrest tax evaders, smugglers. They have the power to patrol freely. Other powers include the power to examine stock to ensure that the requisite and adequate duties and taxes thereon have been paid. Also, the power to search premises, the power to seize aircraft or ships found to have been carrying unaccustomed goods, the power to prosecute tax defaulters in court, the powers to impose penalties, and to level distress for excise and sales tax are all powers of the Commissioner of Customs, Excise and Preventive Service. Are we together? Now let's move to the Commissioner of Value-Added Tax Services. Commissioner of Value-Added Tax Services or Service. The Commissioner of Value-Added Tax Service is the head of the Value-Added Tax Service and performs the following functions. He is responsible for the day-to-day administration of the service. He is responsible for the collection of value-added taxes, National Health Insurance Levy, Ghana Education Trust Fund Levy, GET Fund, and penalties and interest due to the states. And also, one of the functions he performed is the payment of the amounts collected in the consolidated fund into the consolidated fund, Ghana Educational Trust Fund, GET Fund, and National Health Insurance Fund. Again, the functions of the Commissioner of VAT Service include the day-to-day administration of the service, that is, the cease to the day-to-day administration of the service, collection of value-added taxes, national health insurance levy, Ghana Education Trust Fund, and penalties and interest due to the state. And he pays the amounts collected into the consolidated fund, Ghana Educational Trust Fund, GET Fund, and National Health Insurance Fund. What are the powers of the Commissioner of Value-Added Tax Service, VAT? The VAT Act of 1998 has provided the Commissioner of VAT with the following powers to enable him or her further carry out the functions assigned to him or her as stated earlier. One of the functions is the power to take samples. Power to take samples. Yes, an officer of the value-added tax service may take samples of goods from the possession of any person where he considers it necessary to protect revenue against mistake or fraud. Also, the power to seal off premises. The Commissioner of VAT or any officer authorized by him may apply to a court to seal off, lock up, or in any physical manner prevent any person from entry or gaining access to the premises of any person or taxable person who there are reasonable grounds to believe has not paid the tax due or has made a false claim for repayment of his tax. And also the power of inspection and warrants. An officer of the value-added tax service may at any reasonable time enter premises used in any way for business purposes, including premises where taxable goods are stored, and the officer may open any packaging and inspect and take stock of any goods and examine business records, accounts, and correspondence on the premises. And this is usually done where the issue of a taxpayer is being referred to the investigation team of the service. Okay, and also for compliance purpose, the service may decide at any time to enter premises used in any way for business purposes, including premises where taxable goods are stored, and the officer may open any packaging and inspect and take stock of any goods and examine business records, accounts, and correspondence on the premises. Also, we have the power to compound an offense. It should be noted that this power is the exclusive right of the Commissioner of VAT. And among other powers, the power to impose penalties, the power to prosecute tax defaulters in court, the power to garnish amounts owed to a tax debtor, and the power to levy distress. Are we together? Now, let's look at the collection of tax by distress, that is attachment and garnishment. All the three commissioners have power to collect tax and debt due, okay, and debt due to their respective service by distress, that is attachment, and by garnishment, that is issuing of garnishing order. Hence, the need to explain what this entails. Commissioner, as used below, will then apply to all the commissioners of the three revenue agencies. We have the collection of tax by distress or attachments. The commissioner may recover any unpaid tax by distress proceedings against the movable property of a person liable to pay tax, referred to as the tax debtor, by issuing an order in writing specifying the person against whose property the proceedings are authorized, the location of the property, and the tax liability to which the proceedings relate. Please note that the commissioner may require a police officer to be present while distress is being executed, and the commissioner may at any time enter any house or premises described in the order authorizing the distress proceedings to execute the distress. Any property distrained shall be identified by the pasting or hanging of a piece of ribbon or cloth determined by the commissioner to or on a conspicuous place of the property. Where the property concerned is perishable goods, they shall be kept at the premises where the distress is levied, or the commissioner may determine any other place where they should be kept at the cost of the tax debtor. The goods may be sold after a reasonable period determined by the commissioner, either by auction or any other manner directed by the commissioner. The proceeds of a disposal shall then be applied by the auctioneer or seller towards the cost of taking, keeping, and selling the property distrained upon, then towards the tax due and payable, and the remainder of the proceeds shall be given to the tax debtor. You understand? So where the proceeds are not sufficient to meet the cost of the distress and the tax due, the commissioner may sue for and recover the amount due with full cost of suit in any court. Where a tax debtor is the owner of landed property situated in Ghana, the commissioner may, by notice in writing, notify the tax debtor of the intention to apply to the chief registrar of lands for the landed property to be subject of security for tax as specified in the notice. It is only after the tax due has been settled will the notice of direction to the chief registrar be cancelled. Are we together? So that's for the collection of tax by distress or attachments. Now let's look at the recovery of tax from person owing money to tax debtor. That's garnishment. Where the tax debtor has not paid tax which is due, the commissioner may, by notice in writing, require any other person owing or who may owe money to the tax debtor, holding or who may subsequently owe money for or on account of the tax debtor, holding or who may subsequently owe money on account of a third person for payment to the tax debtor, or have authority from a third person to pay money to the tax debtor, to pay the money to the commissioner on the date set out in the notice up to the amount of tax due. So with this, you should know the difference between garnishment and distress. Are we together? Are we together? So to explain the recovery of tax from person owing money to tax debtor, it should be noted that the tax debtor will be served a copy of the notice, and a person served with notice as enumerated earlier is and who is unable to comply with the notice by reason of lack of monies, that is after he has received notice of assessment to pay a particular tax. So where he is unable to pay or to comply with the notice by reason of lack of monies owing to or held for the tax debtor, shall as soon as is practicable notify the commissioner accordingly in writing, setting out the reasons for the inability to comply. Okay, so that is where a third party has been required or requested to pay directly to the commissioner money owed to the tax debtor. Are we together? So such notice cannot be later than the payment date specified in the notice by the commissioner. Upon receipt of such notice from a person, the commissioner may, by notice in writing, accept the notification and cancel or amend the notice issued or reject the notification. A person dissatisfied with such a decision of the commissioner may only challenge the decision under the objection and appeal procedures specified in the tax laws. So a person making payments pursuant to a notice by the commissioner to pay amounts due to the tax debtor commissioner is such a person who complies with the commissioner's debt with the tax debtor and no monies are due from that person to the tax debtor again in respect of the debt owed the tax debtor. Are we together? So irrespective of whether there is an existing contract or an agreement that money should be paid directly to the tax debtor, where a notice of garnishment has been served, okay, so the third party that is owing the tax debtor may have to pay directly to the commissioner. Are we together? So that's for Ghana. Are we together? Do you understand? Now let's look at the tax structure in Nigeria. in Nigeria. The tax laws allow all tiers of government to establish their own tax authorities. Okay. At the federal government level, we have the Federal Inland Revenue Service Board, and at the state level, we have the State Internal Revenue Service, and at the local government, we have the Local Government Revenue Committee. So the administration of taxes is therefore vested in various tax authorities, depending, however, on the type of tax under consideration. Are we together? So we explain this in detail as we proceed. Are we together? So do you have any questions so far? So good. Okay, in the absence of no questions, we can continue. Now let's take the composition and duties of revenue agencies in Nigeria. Composition and duties of revenue agencies in Nigeria. We have the State Board of Internal Revenue, as mentioned. Here, the finance miscellaneous taxation provisions Internal Revenue Service. It must, however, be noted that Section 87 of the Personal Income Tax Act establishes the State Board of Internal Revenue. Establishes the State Board of Internal Revenue. Now let's look at the composition of the State Board of Internal Revenue. The State Board of Internal Revenue shall consist of 1, the executive head of the State Internal Revenue Service. As the chairman of the State Internal Revenue Service Board is often appointed by the governor. Okay, is appointed by the governor. And the directors and heads of departments within the Internal Revenue Services, 3 other persons nominated by the Commissioner for Finance in the state on their personal merits, a director from the State Ministry of Finance, a legal advisor from the State Ministry of Justice, and the Secretary of the State Internal Revenue Service, who shall be an ex officio member. Who shall be an ex officio member. Are we together? So these are the components or composition of the State Board. Now we have quorum. Notice that any 5 members of the State Board, of whom one must be the chairman or a director, shall constitute a quorum. Are we together? So now let's take the duties of the State Board of Internal Revenue. Their duties include to ensure the effectiveness and optimum collection of all taxes and penalties due to the government, that is the state government, under the relevant tax laws, doing all such things as may be deemed necessary and expedient for the assessment and collection of the tax, accounting for all amounts so collected in a manner to be prescribed by the commissioner, issuing instructions or directives on technical aspects of assessment, including interpretation of Income Tax Act to their various officers. Also, their duties include to advise the government through the Commissioner for Finance on tax matters, which include amendments to tax laws, and appoint, promote, or transfer, and impose disciplinary measures on employees of the state service. And we have the technical committee as well. Apart from the board of the State Internal Revenue Service, we equally have the technical committee, and this comprise or consists of the chairman of the State Board of Internal Revenue Service as the chairman of the technical committee, the directors within the state service, the legal advisor to the state service, and the secretary of the state service. What are the functions of the technical committee? The functions or their functions include power to deploy additional staff from within the state service for the purpose of discharging its duties, advises the state board in all its powers and duties, considers all matters that require professional and technical expertise, and makes recommendations to the state board and attends to other matters referred to it by the board from time to time. So that's that for the state Board of Internal Revenue Service. Now let's look at the Local Government Revenue Committee. The Local Government Revenue Committee comprised of the Supervisor for Finance as chairman, the three local government councillors as members, and two other persons experienced in revenue matters to be nominated by the chairman of the local government on their personal merits. Again, the composition of the local government revenue committee consists of the supervisor for finance as chairman, three local government councillors as members, and two other persons experienced in revenue matters to be nominated by the chairman of the local government on their personal merits. The functions of the local government revenue committee include the responsibility for the assessment, okay, responsible for the assessment and collection of all taxes, fines, and rates under its jurisdiction and account for such in a manner to be prescribed by the chairman of the local government and to be autonomous of the local government treasury, and shall be responsible for the day-to-day administration of the department, which forms its operational arm. So having discussed discussion on the state internal revenue body, the State Internal Revenue Service Board, rather, and the Local Government Revenue Committee, there's need also to discuss the Federal Inland Revenue Service Board, which is the tax administration office, or which is the board for tax matter at the federal government level. The board was first established under Section 3 of the repealed Income Tax Administration Ordinance of 1958 and amended by subsequent acts and decrees. The Finance Miscellaneous Taxation Provisions Amendment Decree Number 3 of 1993 provided for an operational arm to be known as the Federal Inland Revenue Service. So, Federal Inland Revenue Service is an operational arm of the Federal Inland Revenue Service Board. The Federal Inland Revenue Service Board comprises of an executive chairman, who shall be a person within the service experienced in taxation to be appointed by the president, the directors and heads of departments of the service, the officer from time to time holding or acting in the post of director with responsibility for planning, research, and statistics matters in the Federal Ministry of Finance, a member of the board of the National Revenue Mobilization, Allocation and Fiscal Commission, a member from the Nigerian National Petroleum Corporation, not lower in rank than an executive director, a director from the department, a director from the National Planning Commission, a director from the Department of Customs and Excise, the Registrar General of the Corporate Affairs Commission, CAC, and the legal advisor, who shall be an ex-officio member of the board. Okay, so we have duties. Duties, these are as follows: advising the federal government through the Minister of Finance on tax matters, which include any amendment to the existing law, assessment and collection of companies' income tax, issuing instructions on the financial aspect of assessments, including interpretation on Income Tax Act, reviewing and approving the strategic plans of the service, employ and determine the terms and conditions of service, including disciplinary measures of the employees of the service, and do such other things which, in its opinion, are necessary to ensure the efficient performance of the functions of the service under the Act. I also have the Joint Task Board. The Joint Tax Board was established under Section 85, subsection 1 of the Personal Income Tax Decree 1993 as amended. And this comprises of the chairman of the Federal Board of Inland Revenue Service, who is also the chairman, one member from each state being a person experienced in income tax matters nominated by the Commissioner for Finance of the state. Secretary, who is not a member but only in attendance for purpose of maintaining records of the board's proceedings, is appointed by the Federal Public Service Commission, and legal officer who is not a member but attends meetings in advisory capacity. Quorum, the quorum of the Joint Tax Board at any meeting is 7 members, or their representative shall constitute a quorum. That is, any 7 members of the JTB or their representative shall constitute a quorum. What are the duties of the Joint Tax Board? Their duties include to settle disputes between the states as regards tax matters, especially disputes as to residence and remittance, also to promote uniformity both in the application and incidence of the provisions of tax laws on individuals throughout the country, to advise the government on requests in respect of double taxation arrangements, rates of capital allowances, and other tax matters, and then to impose its decisions on matters of procedure and interpretation of the Act on any state for purposes of conforming with agreed proceeding or with agreed procedure or interpretations. Now, the Joint Tax Board has been taken. Now, let's look at the Joint State Revenue Committee for the local government purpose. The Joint Tax Board is for the state, while the Joint State Revenue Committee is for the local governments. The Joint State Revenue Committee was established by Section 92 of the Personal Income Tax Act 1993 as amended for each state of the Federation. And it consists of the following: chairman of the State Internal Revenue Service as the chairman of each of the local government revenue committees, a representative of the Revenue Mobilization, Allocation, and Fiscal Commission as an observer, a representative of the Bureau of Local Government Affairs, not below the rank of a director, the state sector commander of the Federal Road Safety Commission as an observer, the legal advisor of the State Internal Revenue Service, and the secretary of the committee, who shall be a staff of the Internal Revenue Service. Okay. Their duties include to advise the Joint Tax Board and state and local governments on revenue matters, implement the decisions of the Joint Tax Board, harmonize tax administration in the states, enlighten members of the public generally on state and local government revenue matters, and carry out such other functions as may be prescribed from time to time by the Joint Tax Board. Are we together? Okay. Now we have the Tax Appeal Tribunal. This is usually established by the Minister of Finance or State Commissioner for Finance by notice in the Gazette. An appeal commissioner shall be appointed from among persons with experience in tax matters, accountancy, or law in Nigeria. The appeal commissioner shall hold office for a time of 3 years, renewable for another term of 3 years only, and no more from the date on which he assumes his office or until he attains the age of 70 years, whichever is earlier. He may resign as an appeal commissioner by notice in writing. He may, however, be allowed to sit at any further hearing in a case in which he has already sat before that date of resignation to hear an appeal until a final decision has been given on such appeal. He may, however, cease to hold such office if the state commissioner determines that his office be vacant and due notice is given in Gazette or on his acceptance of a political appointment. So the salary and allowances payable to and the terms and conditions of service of the tax appeal commissioners shall be determined by the Revenue Mobilization Allocation and Fiscal Commission, RAMAF, and shall be prescribed in terms in their letters of appointment. Are we together? Any questions so far so good? In the absence of none, let's continue. We have tax administration and procedure in Liberia. Tax administration and procedure in Liberia. In the Republic of Liberia, the following are the procedure for filing and payment of tax in Liberia. Time and place of filing and payment of tax. Yes, we have timely filing and payments. A taxpayer's return is considered to have been timely filed if it is received at the taxpayer's designated place for filing by the due date, and any accompanying payment is considered to have been timely made. Are we together? That's for timely filing and payments. And the due date, for due date, a taxpayer's income tax return and turnover tax return and tax payments are due not later than 5 p.m. on the date provided in the code under the personal and business income tax. A taxpayer's sales or service tax return and tax payments not later than are due not later than 5 p.m. on the due date provided in the code under the goods and services tax. And for extension of time to file return upon application in writing by a person, upon application in writing by a person required to file a return under any provision of the Revenue Code, the minister may, where good cause is shown, extend the period within which to file return. This does not, however, alter the due date for payment of the tax. Are we together? And also we have extension of time to pay tax upon application in writing by a person liable for tax under the Revenue Code. The minister may, where good cause is shown, extend the time for payment of tax by the person and may impose requirements appropriate to ensure the payment of the tax due. An extension does not alter the due date for payment of tax for the purpose of calculating interest. For the purpose of calculating interest. Are we together? And then lastly, we have designated place for filing payment. Designated place for filing payments. A taxpayer's tax return and tax payments are to be received on or before the due date in the minister's office in Monrovia. Okay, so the designated place of filing in Liberia is Monrovia. So, and the office is the office of the minister, okay, of tax, minister of tax. So, taxpayers residents or domiciled outside Liberia are required to file a tax return, make a tax payment that are required to file tax return, make a tax payment, may file return or make payment at the place designated by the ministry for receiving returns in their country of domicile or in the ministry office in Monrovia. In Monrovia, if no location is designated, the place of filing is in the ministry office in Monrovia. Now let's take penalty for late filing or failure to file. For penalty for late filing or failure to file, Section 51 of the Revenue Code provides as follows. We have late filing. Okay, so a tax return is subject to the following late filing penalty if it is received after the due date at the taxpayer's designated place of filing. One, the penalty for late filing of a tax return other than a tax return that is required to be filed monthly is 1% of the tax required to be shown on the return, and the penalty increases by 1% per month or part of a month that the return is late. Also, the penalty for late filing of a tax return that is required to be filed monthly is $200 or 5% of the tax required to be shown on the return, whichever is greater for each day that the return is late. And then for failure to file, if a taxpayer fails to timely file a return other than a tax return that is required to be filed monthly, and the failure continues for more than 3 months after the deadline, the taxpayer is considered to have failed to file as of the first day after 3 months period and is subject to the failure to file penalty. If a taxpayer fails to timely file a return that is required to be filed monthly and the failure continues for more than 1 month after the deadline, the taxpayer is considered to have failed to file as of the first day after the expiration of 1 calendar month after the filing due date and is subject to the failure to file penalty. Calculation of the penalty are: the penalty for late filing of a tax return other than a tax return that is required to be filed monthly is 10% of the tax required to be shown on the return, and the penalty increases by 5% per month or part of a month that the failure continues, not to exceed 100% of the tax required to accompany the return. The penalty for failure to file a tax return that is required to be filed monthly is $5,000 or 20% of tax required to be shown on the return, whichever is greater, increased by 10% per month that the failure continues, except that the amount is limited to the amount determined in A above. If the taxpayer is convicted of willful failure to file, the penalty is doubled, and the taxpayer may also be subjected to a term of imprisonment of up to 5 years. And then for tax return required to be collected on imports, on the import of goods for which a customs consumption entry is required, evidence of payment of any tax required to be collected on import is sufficient to satisfy the return filing requirement with respect to those goods, and the customs consumption entry form is evidence of the amount and type of tax paid. And for application of penalties, if the conditions for the importation of both the late filing penalty and the failure to file penalty apply, both penalties are imposed. So the penalty for willful failure to file can be imposed only if the taxpayer is duly convicted in a criminal court proceeding as authorized under the criminal justice law of Liberia. Penalty for late payment of tax or failure to pay tax. For the late payment, a taxpayer has an obligation to make timely payment of tax due for a tax period. Tax is timely paid if it is received in the taxpayer's designated place for payment by the due date. And the minimum penalty for late payment is 2% of the unpaid tax, and the penalty increases by 2% per month or part of the month that the return is late, but not in excess of 50% of the unpaid tax. Interest on a late payment is at the market rate published by the Central Bank of Liberia. Are we together? And also, penalty for failure to pay tax, where a taxpayer has failed to timely pay or fail to pay taxes as of when due, and the failure continues for more than 3 months after the deadline, the taxpayer is considered to have failed to pay tax and is subject to failure to pay penalty. The minimum penalty for failure to pay is 10% of the unpaid tax increased by 10% per month or part of a month during which the tax remains unpaid, not and will not exceed 200% of the unpaid tax. So calculation of the penalty begins as of the day the taxpayer is deemed to have failed to pay. If the taxpayer is convicted of willful failure to pay, the penalty is doubled, and the taxpayer may also be subjected to a term of imprisonment of up to 10 years. Tax return for the tax required to be collected on import. On the import of goods for which a customs consumption entry is required, evidence of payment of any tax required to be collected on import is sufficient to satisfy the tax payment requirements with respect to those goods, and the customs consumption entry form is evidence of the amount and type of tax paid. So failure to pay at the time of import, any tax required to be paid on import is subject to the penalties provided under the customs law for failure to pay custom duties. Are we together? Now let's look at the duties of minister and Deputy Minister for Revenue. Okay, so for the minister is authorized and required to oversee all of the operations of Ministry of Finance, including any matters assigned under the Revenue Code through the agencies, officers, and employees of the ministry, delegating such responsibilities as minister may deem appropriate, except that the minister may not delegate the authority to approve the remittance or reduction of tasks otherwise due. And then the deputy minister, for the deputy minister is authorized and required to oversee all of the operations of Revenue Department of the Ministry of Finance, including application of the Revenue Code through the agencies, officers, and employees of the ministry, delegating such responsibilities as deputy minister may deem appropriate, except that the deputy minister may not delegate the authority to approve the remittance or reduction. Okay, so I accept where the minister do not delegate the authority to approve the remittance or reduction of tasks otherwise due. So for the minister, that's for both the minister and the deputy minister. So now let's look at the right of appeal and the board of tax appeals. Okay, so the right of appeal and then the board of tax appeals. Now, for the right of appeal, taxpayer has the right to appeal a determination of the minister to the board of tax appeals, provided that the taxpayer first pays the tax due or provides a bond or other security for payment. If a taxpayer has appealed a determination, the minister may not enforce that determination until the decision of the board of tax appeal is final. Board of tax appeals. The board of tax appeals has 7 members that airs taxpayer appeals from determinations by the minister and emergency protest of the minister's actions. The board is independent of the ministry and is administered under the authority of the ministry. It has the authority to approve, modify, or reverse a determination. The minister or the taxpayer may appeal an unfavorable decision to Liberia Tax Court, provided that the appeal is lodged within 30 days and is in conformity with the rules of the court. Are we together? So let's look at the composition of the board. Okay, let's look at the composition of the board. The members of the board are to be appointed by the president with the concurrence of the Senate for a time of 5 years. The members of the board are to be appointed by the president with the concurrence of the Senate for a time of 5 years. For no more than 2 consecutive terms, members must meet the following qualifications. Members must meet the following qualifications. One is that members must have been awarded a university degree. The members shall not be a current member of the board of directors or officer of any Liberian legal person, and then shall not be related to an employee. Okay, shall not be related to an employee of the ministry or be related to a Liberian legal person. Also, the member must have experience or training in at least one of the following areas. Law, accounting, banking, business administration, finance, or economics. And at least 3 board members out of 7 must be a lawyer or must be lawyers. Are we together? So now, and also, uh, before we move further, so let's look at the hearing of appeal and then decision. I'll just discuss that in brief. Okay, so still under the composition of the Board of Appeal, and we are looking at some of their functions or duties. Okay, so hearing of appeal, a person who objects to a determination by the minister with respect to any tax under the revenue code, including the amount of tax withheld in accordance with any withholding provisions of the code, or who objects to the seizure or confiscation of goods or accounts carried out in the tax collection process, may appeal to the Board of Tax Appeals for a review of the minister's determination. So, and then the Board of Appeal, we then what? We then uh, looks into the matter and make appropriate decision. Okay, so the decision of the board is to render its decision in writing within the period for decision, which is 60 days after the day the hearing is concluded. A party dissatisfied with the decision may appeal to a court of competent jurisdiction, provided that the appeal is made within 30 days of the date of the board's decision has been served on the party. The board's decision is not final until the 30-day period for appeal has ended, or if the board's decision is appealed, at the time the decision of the court becomes final. All decisions of the board are to be available as public records as soon as practicable, but not later than 10 working days after the decision is entered. Are we together? So after the Board of Appeal, then if the taxpayer or one of the party is aggrieved, then may further appeal uh, to the Court of Competent Jurisdiction. Are we together? Now let's look at the assessments and the Liberia position. We have a general rule, and the general rule states that an assessment of tax payable by a person is made in one or more of the following ways. One, by self-assessment in the form of the taxpayer's statement of tax due on a return for a tax year. And in the case of a tax collected by withholding, by the act of withholding, if the minister is not satisfied with a return or withholding statement filed by a person, or if a person fails to file a required return, or if no return or withholding statement is required by making a determination before the due date for filing a return of payment of tax, if the minister has reasonable grounds to believe payment of tax is in jeopardy in accordance with regulations the minister shall provide by making jeopardy assessments. Are we together? Now, let's look at the amendment of assessment. The minister may, within the assessment period stated above, the minister may, within the assessment period stated under the period of assessment, amend an assessment by making such alteration or additions to the assessment as the minister considers necessary and following the procedures required for an assessment, except that the amendment to jeopardy assessments are subject to the jeopardy procedures. And we have the due date for assessment. The due date for assessment or assessment is considered to be made on the due date for filing the return, the date the return is filed, whichever is later, on the date the tax is required to be withheld, on the day or on the date the withholding occurs, whichever is later, or on the due date of the return or the day the return is filed, whichever is later, or if no return is filed, when the minister first issues a notice of determination with respect to the tax year and on the date on which the jeopardy is assessment, or on the date on which the jeopardy assessment is made. Are you together? Now let's look at the period of assessment. In Liberia, the period for the minister to make an assessment under the general rule, under the general rule 3, or an amended assessment under the amendment of assessment, ends 5 years after the date on which the return was required to be filed or the tax is withheld, except if a person is required to file a return or to withhold tax, but the return is not filed or the withholding does not occur, then the assessment period ends 10 years after the due date for filing the return or making the withholding. Or if a taxpayer is not required to file a return, but tax should have been paid and was not, then the assessment period ends 5 years after the last day of the tax year for which tax should have been paid. Okay. Now let's look at the notice of assessment. Notice of assessment. Where an assessment has been made and the tax has not been paid on or before the assessment date, the minister shall serve a notice of the assessment on the person assessed, stating: 1, the amount of tax payable under the assessment; 2, a date on which the assessed tax is to be paid immediately if the assessment is jeopardy assessment, and in other cases no sooner than 10 days after the notice of assessment; and 3, the time, place, and manner of appealing the assessment, or if the assessment is made by the minister's determination, a notice of assessment shall be served only when the determination becomes final. Are we together? Okay. So now let's look at the payment of tax under assessment. Payment of tax under assessment and turnover assessment. Still the position in Liberia. For payment of tax under assessment, tax payable under the notice of assessment is due on or before the due date specified in the notice of assessment. And for turnover assessment, a person with gross income of less than $5 million for a tax year does not have an obligation to pay income tax. A person with gross income of less than $5 million for a tax year does not have an obligation to pay income tax, but is subject to a presumptive tax on gross income at the rate of 4% of the turnover tax. And this is called the turnover tax. It is called the turnover tax. So this is the what? Tax administration and procedure in Liberia. Are we together? Okay. So we are progressing. Do you have any question? Are we good to go? So we can proceed. We have tax collection in Nigeria. Tax collection in Nigeria. So we are starting with the jurisdiction of the Federal Inland Revenue Service Board. In Nigeria, the administration of the following taxes falls under the jurisdiction of the Federal Inland Revenue Service Board. We have the company's income tax, withholding taxes on companies and residents of Federal Capital Territory, Abuja, and non-residents. Also, we have the petroleum profit tax, we have the value added tax, we have the education tax, we have the capital gains tax, we have the stamp duties on corporate bodies and non-residents, and we have the personal income tax in respect of members of armed forces of the Federation and police force, residents of FCT, and staff of foreign affairs and non-residents. Please note that since the establishment of the Federal Capital Territory Internal Revenue Service, FCTIRS, okay, the Federal Inland Revenue Service is no longer the tax office, okay, or is no longer the tax jurisdiction for residents of the Federal Capital Territory, Abuja, okay. Again, the residency or the relevant tax authority for residents of Federal Capital Territory is now the Federal Capital Territory Internal Revenue Service, FCTIRS, Abuja. Okay, so but for the purpose of this exam, are we together? So for the purpose of this exam, the FRS still administer taxes of the residents of the Federal Capital Territory. Again, I repeat, for the purpose of your exam, the Federal Inland Revenue Service Board still administer taxes of the residents of Federal Capital Territory, Abuja. Note that the board, that is the Federal Inland Revenue Service Board, may by notice in the Federal Gazette or in writing authorize any person to exercise on behalf of the board any power or duty conferred on the board other than the duties specified in the first schedule to the Companies Income Tax Act C20 LFN 2004 as amended. The board, with the consent of the minister, may also authorize the Joint Stars Board, authorize the Joint Stars Board to perform or exercise any power conferred on the board, including the power or duties specified in the first schedule. Are we together? So now let's take taxes collectible by state governments in Nigeria. In Nigeria, the types of taxes collectible by state governments include the following: pay as you earn, payee; direct taxation, self-assessment; withholding taxes, individuals only; capital gains tax on individuals only; stamp duties on instruments executed by individuals; pools, betting, and casino taxes; road taxes; development levy for individuals only; naming of street registration fee in state capital; right of occupancy on land by state government in urban areas; market taxes and levies where state finances are involved; and business premises registration for urban areas, 10,000 naira for registration, 5,000 naira for annual renewal, and for rural areas, 2,000 naira for registration, and then 1,000 naira for renewal. Are we together? So that's that for the state government. And at the local government level, we have the levies and dues collectible by the local governments. So in Nigeria, this includes shops and kiosk rates, on-off liquor license fees, slaughter slab fees, tenement rates, market taxes and levies, excluding any markets when state finance is involved, customary burial ground permit fees, bicycle, truck, canoe, wheelbarrow, and cart fees other than a mechanically propelled truck, marriage, birth, and death registration fees, cattle tax payable by cattle farmers only, merriment and road closure levy, radio and TV license fee, among others, include wrong parking fees, motor park levies, domestic annual license fees, vehicle radio license fees, radio and TV license fees, and the likes. So just know that they are not limited to the to what we listed on this page. So we still have more. Okay, so you can get that from your class notes. Thank you. Now, techniques or procedures of tax collection and assessment in Nigeria. For each year of assessment, a taxable person shall file a return of income in the prescribed form and containing the prescribed information with the tax authority of the state within 90 days from the commencement of every year of assessment. So where a taxable person has delivered a return, the relevant tax authority may either accept the return and make an assessment accordingly, or refuse to accept the return and, to the best of his judgment, determine the amount of the assessable, total, or chargeable income and make an assessment accordingly. There may be additional assessments if the tax authority later discovers that the taxable person has been assessed at a lower amount within the year of assessment or within 6 years after the expiration thereof. So the tax authority should send to the taxpayer or to the taxable person the notice of assessment, which should state the following: amount of any assessable, total or chargeable income, tax charged, place at which payment should be made, and rights of objection, if any, of the taxable person. Determination of an objection or appeal. On the determination of an objection or appeal, if applicable, the tax shall be payable within 1 month of the date of service of the notice on the taxable person. On the determination of an objection or appeal, if applicable, the tax shall be payable within 1 month of the date of service of the notice of the taxable person. And we have tax returns. Every company is required to file its tax returns. Every company is required to file its tax returns. audited accounts, income tax and capital allowances computations with the Federal Inland Revenue Services within 6 months after the end of the company's accounting year in the case of an old company, or in the case of a newly incorporated company, 18 months from the date of incorporation, or 6 months after the end of its first accounting period, whichever is earlier. So every company, including a company granted exemption from incorporation, shall at least once a year without notice or demand therefrom file a return with the board in a prescribed form and containing prescribed information together with the following: self-assessment return in the prescribed form, audited financial statements, capital allowances computation, and a true and correct statement in writing containing the amount of its profit from each and every source computed, and declaration on the truth and fairness of computed amounts and signed by a director or secretary of the company. So also we have penalty for late returns. Any company which fails to file returns shall be liable to pay as penalty an amount of 25,000 in the first month in which the failure occurs, and 5,000 naira for each subsequent month in which the failure continues. Okay, so please note that this provision on penalty for late returns is per the extant tax law, as I mean the prior to the introduction of the Finance Act of 2019. What we have in existence is the penalty for first uh, time the failure occurs 25, and for subsequent months is 5,000 naira. But with the Finance Act of 2019, the penalty has been reviewed upward from 25,000 to 50,000 in the first month in which the failure occurs, and from 5,000 to 25,000 naira for each subsequent month in which the failure continues. But for the purpose of this exam, what we have is what is 25,000 in the first month in which the failure occurs, and 5,000 naira for each subsequent month in which the failure continues. Now, let's look at the tax returns by companies operating in the capital market. Every company operating in the capital market shall file with the relevant tax authority not later than 7 days after the end of each calendar month a return in the prescribed time or in the prescribed term of its transactions during the preceding calendar month, which will include the following information if it is in the primary market: type of offer, services rendered, and amount of value-added tax payable. So if in the secondary market, we have number and value of transactions, we have commission received, amount of tax deducted at source, and amount of value-added tax payable. Now that's for Nigeria. Now let's look at the taxes operating, various taxes operating in Ghana, Ghanaian tax. Okay. So before we proceed, do you have any question? Any questions so far so good? In the absence of none, let's proceed. Let's proceed. In Ghana, the following tax laws are currently in force and cover the taxes indicated: A. Internal Revenue Act 2000 Act 592, which covers income tax, gift tax, and capital gains tax. Okay, so it covers the income. Under the income tax, we have the personal, corporate, partnership, and body of persons. And B, Minerals and Mining Law of 1986, PNDC Law 153, which governs taxation of companies in the minerals and mining sector. And also we have Minerals Royalties Regulations, LI 1349, governing taxation of royalties to be paid by owners of mining concessions. And also we have the Petroleum Income Tax Law 1987, PNDC Law 188, governing the taxation of companies in the petroleum exploration sector. We have the Stamp Act 1965, Act 311, which covers the duty payable on instruments, stated capital, etc. Customs, Excise, and Preventive Service Management Law, PN 1993, PNDC Law 330, governing import duties, export duties, excise duties, vehicle import tax, import VAT, petroleum tax, national health insurance levy on imported goods, special tax, ECOWAS levy, export development and investment fund levy. And then lastly, we have the Value Added Tax Act of 1998 at 546, which governs value added tax. Now let's look at the objections and appeals procedure in Nigeria. The position or the objections and appeals, the Nigerian position. In Nigeria, if a person disputes an assessment, he may apply to the relevant tax authority by putting up a letter of objection stating precisely the grounds of objection to the assessment. This letter of objection shall be made within 30 days from the date of service of the notice of the assessment. Here, an aggrieved taxable person having failed to agree with the relevant tax authority may appeal against the assessment on giving notice within 30 days after the date of service of notice of refusal of the relevant tax authority to amend the assessment as desired. And the notice of appeal, which must be in writing, must contain the following: A, the name and address of the applicant, the official number and the date of the relevant notice of assessment, the amount of tax or the amount of the assessment, total or chargeable income, and of the tax charged as shown by that notice and the year of assessment concerned, the precise grounds of appeal, address for service of any notice or other document to be given to the applicant, and the date on which the applicant was served with notice of refusal by the relevant tax authority to amend the assessment as desired. And also we have objections and appeals. Let's look at the position in Ghana. In Ghana, the in Ghana, the Internal Revenue Act 2000 Act 592 provides for administrative resolution of disputes arising from objections and judicial resolution of disputes. Let's take this one after the other. We have the objection to assessments. Here, the taxpayer is permitted under Section 128 of Act 592 to settle disputes amicably with the commissioner by way of objections to assessment raised on him. This is the administrative resolution of disputes. Under the Act, any person dissatisfied with an assessment made on him has to object to the assessment within 30 days of the service of the assessments on him. For a person who pays tax by installment, objection should be made within 9 months of the commencement of the basis period to which the said provisional assessment relates. So the objection will be considered in the process below. One, objection must be in writing stating precisely the grounds upon which it is made. Objectors can ask for an extension of time for lodging objection with the commissioner on grounds of objector's absence from Ghana, sickness, or other reasonable cause. Objection may be granted partially or wholly by the commissioner, thereby amending the assessment or disallowing the objection. Commissioner is to serve notice of decision of disallowance on the objector, where 90 days after lodging the objection, the commissioner does not act on the objection, the objector should deem it that the commissioner has disallowed this objection. Objector should, with effect from the date, serve notice on commissioner electing to treat his silence as having disallowed his objection. If before this point, the commissioner and the objector agree on, or the objector is satisfied with the commissioner's objection decision in respect of an amendment to assessment or an allowance of the objection, then this closes the chapter on the administrative dispute resolution. Now let's move to the judicial resolution of disputes. This is provided for under Section 129 of Act 592. Appeals against the decision of the commissioner are commenced at the High Court. The objector should lodge these with the registrar of the High Court within 30 days after the service of the notice of the commissioner. Then we have appeals against the decisions of the commissioner. The appeal must be served on the commissioner within 5 working days after it has been filed at the High Court and must be instituted against the Attorney General and the extension of time for filing appeals in courts. This can only be lodged later than 30 days after the delay in lodging the notice of appeal is due to the objector's absence from the country, Ghana, sickness, that is, if the objector is sick, other reasonable cause, or there is no unreasonable delay on the part of the objector. No action would be entertained without objection and appeal procedure being followed. Now let's take a look at the power of the High Court. During the trial, the High Court may confirm, reduce, increase, or annul the assessment on which the decision is based, or make an appropriate order. Appeal to the Courts of Appeal and Supreme Court. Under Section 130 of Act 592, the Commissioner or the appellant may appeal against the decision of the High Court of Appeal, against the decision of the High Court to the Court of Appeal on a matter of law only. An appeal against a decision of the Court of Appeal shall lie as of right to the Supreme Court. An appeal to the Court of Appeal or to the Supreme Court is to be instituted within 30 days after the relevant decision has been given. Payment of deposit by objector on appeal. An objector is required under Section 131 of Act 592 to pay an amount not less than the amount payable in the first quarter of that year in respect of provisional assessment before an appeal can be held. Okay. An objector is required under Section 131 of Act 590 to pay an amount not less than the amount payable in the first quarter of that year in respect of provisional assessment before an appeal can be held. So unless this is paid, no court shall entertain the objection. The burden of proof. Section 132 of Act 592 is the effect date. As in all tax cases, the burden of proof is on the taxpayer to show on the balance of probabilities that the assessment on him is either excessive or erroneous. Any questions? Okay, in the absence of none, let's continue. We have offenses and penalties, the position in Nigeria. In Nigeria, here, income tax charged based on an assessment which is not or has been the subject of an objection or appeal shall be payable after the deduction of any amount to be set out for the purposes of collection or any amount deposited against the tax at the place stated in the notice of assessment within 2 months after the date of service of that notice. However, if the period of 2 months expires before the 14th day of December within the year of assessment for which the income tax has been charged, and the aggregate of the tax is to be deducted and of any income tax paid for that year within that period amounts to not less than 1/2 of the tax so charged, then payments of any balance of such tax may be made not later than that day, December 14 of the assessment year. Again, for emphasis sake, I would like to repeat myself that in Nigeria, income tax charged based on an assessment which is not or has been the subject of an objection or appeal shall be payable after the deduction of any amount to be set out for the purposes of collection or any amount deposited against the tax at the place stated in the notice of assessment within 2 months after the date of service of that notice. However, if the period of 2 months expires before the 14th day of December within the year of assessment for which the income tax has been charged, and the aggregate of the tax to be deducted and of any income tax paid for that year within that period amounts to not less than 1/2 of the tax so charged, then payment of any balance of such tax may be made not later than that day, December 14th of the assessment year. So for late payment of assessment, if any income charged by any assessment is not paid within the prescribed period, a sum equal to 10% per annum of the tax shall be added thereto. A penalty imposed in this way shall not be deemed to be part of the tax paid for purpose of claiming relief. If payment is not made within 1 month from the date of the service of the demand notice, the relevant tax authority may proceed to enforce payments. Penalty for late payments. The tax due from a taxable person shall carry compounded interest at bank-based lending rates from the date when the tax becomes payable until it is paid. In the case of pay-as-you-earn, Any employer is required to file returns not later than 31st of January, not later than 31st of January of each year with the relevant tax authority of all emoluments paid to employees in its employment in the preceding year. The return in respect of the employees shall show the total emoluments of each employee during the year, the tax relief, if any, and the total tax deducted from the employee. The return specified in the subparagraph above shall be accompanied by a statement and a declaration on Form H1 or any other form approved or prescribed by the relevant tax authority. Any employer who contravenes the provision of the law shall be liable on conviction to a penalty of 500,000 in the case of a corporate body and 50,000 in the case of an individual. So, let's look at the offenses and penalties. The position in Ghana. The various offenses and related penalties under the Internal Revenue Act 2000 Act 592 as amended are as follows. Failure to keep books of accounts is an offense which attracts a penalty of 5% of the amount of tax payable by that person for the year under review. Where a taxpayer fails to furnish a return, this is an offense and the penalty is as follows. One penalty unit in the case of a company, half penalty unit in the case of a self-employed. In respect of each day of default, a penalty unit is the current equivalent of 120,000 naira. Failure to pay tax on due date constitutes an offense, and the attendant penalty is as follows. Failure of not more than 3 months, 10% of tax debt plus tax debt. Failure exceeding 3 months, 20% of tax debt plus tax debt. So under stating estimated tax payable by installment in the case of self-assessment is an offense. Okay, so apart from the above, understating estimated tax payable by installment in the case of self-assessment is an offense in Ghana. Those where a person who pays tax by self-assessment underestimates his chargeable income to a figure less than 90% of his actual chargeable income computed for that year, he becomes liable to pay a penalty equal to 30% of the difference between the tax computed in respect of his estimate and the tax computed in respect of 30% of his actual chargeable income for the year. Making false and misleading statements is an offense in Ghana, and the related penalty is as follows. A, where the misleading or false statement is made without reasonable excuse, the penalty is double the underpayment of tax, which may result if not detected. In addition, where the amount involved exceeds 100 currency points, to a fine of not less than 25 penalty units or not more than 100 penalty units, or to imprisonment for a term of not less than 3 months or not more than 1 year, or both, and in any other case to a fine of not less than 5 penalty units and not more than 25 penalty units, or imprisonment for a term of not less than 3 months and not more than 1 year, or both. Where the false and misleading misstatement is made knowingly and or recklessly, the penalty is triple the amount of the underpayment of the tax, which may result if not detected. And in addition, where the amount of tax involved exceeds 100 currency points, to a fine of not less than 50 penalty units and not more than 200 penalty units, or imprisonment for a time of not less than 1 year or not more than 2 years, or both, and in any other case to a fine of not less than 10 penalty units and not more than 50 penalty units, or imprisonment for a term of not less than 6 months and not more than 1 year, or both. And for aiding and abetting, a person who aids or abates any person to commit an offense, or who counsels or induces any person to commit an offense, is liable to pay a penalty equal to triple the underpayment of tax, which may result if the offense were committed and went unnoticed. In addition, where the amount of tax involved exceeds 100 currency points, to a fine of not less than 50 penalty units and not more than 200 penalty units, or imprisonment for a term of not less than 1 year and not more than 2 years, or both, and in any other case to a fine of not less than 10 penalty units and not more than 50 penalty units, or imprisonment for a term of not less than 6 months and not more than 1 year, or both. For failure to withhold tax, where person fails to withhold tax as prescribed under the Act, that person commits an offense, and the penalty is personal liability to pay to the commissioner the tax due but not withheld. Failure to pay tax, where the amount involved exceeds 100 currency points, a fine of not less than 12.5 penalty units and not more than 100 penalty units, or imprisonment for a term of not less than 3 months and not more than 1 year, or both. In any other case, to a fine of not less than 5 penalty units and not more than 25 penalty units, or imprisonment of a term of not less than 1 month and not more than 3 months, or both. So let's look at the returns, the position in Nigeria for individual taxpayer. In Nigeria, we have individual taxpayers returns and corporate tax returns. Okay, so for individual taxpayers returns, at the end of each year, every employer is expected to make returns to the relevant tax authority, the State Board of Internal Revenue, and under the Pay as You Earn scheme of all emoluments paid to his employees not later than 31st January of every year in respect of all employees in its employment in the preceding year. Such returns usually include the following: certificate of tax deduction of employees, and this shows the total number of employees, amount of tax deducted in respect of all employees, and amount of tax actually paid to the tax authority in respect of deduction made, and completed tax deduction cards of all the employees duly signed by employer or representative, a duly signed statement showing the following: 1, name of each employee; 2, employee's taxable income; 3, amount of tax deducted; and 4, particulars of tax receipts issued. At the beginning of each year of assessment, an employee is expected to submit a complete income tax declaration form on the basis on which the employee will be coded. This will be the basis of ascertaining the personal and other reliefs of the employee for the year of assessment. For the year of assessment. Are we together? Now let's look at the contents of a tax deduction card. Contents of a tax deduction card. A tax deduction card is usually issued by the tax authority. Year of assessment, name of the employee, place of residence of the employee for the year of assessment, and the employee's reference number. So this tax deduction card also has columns for the following: gross pay for each month, pay to date, deduction up to the end of the previous month, and the tax deducted for the month. Okay, tax deducted from the for the month. The employer usually completes all the columns at the end of each month except the column of free pay to date, which is always completed by the tax authority before the card is issued to the employer. Are we together? So it is expected that every company at least once a year, without notice of demand, file a return with the relevant tax authority, the Federal Inland Revenue Service Board, in the prescribed form, and containing prescribed information together with the following: the hotel financial statements, capital allowances and tax computations, and a true and correct statement in writing containing the amount of its profit from each and every source, and such particulars in relation to any relevant profits, allowances, reliefs, and deductions. The form of returns shall contain a declaration which shall be signed by a director or secretary of the company that the return contains a true and correct statement of the amount of its profit computed in respect of all sources, and that the particulars given in such returns are true and complete. So let's look at the timing of filing returns. It is important that a company that has been operating for more than 18 months must file returns and audited financial statement with the board not more than 6 months after the close of the company's accounting year. However, in the case of a newly incorporated company, within 18 months from the date of its incorporation, or not later than 6 months after the end of its accounting period, whichever is earlier. Are we together? Whichever is earlier. Now let's look at the penalty for late or filing of returns in Nigeria. Failure to comply with the filing of returns as and when due attract penalty as follows: 25,000 in the first month in which the failure occurs, and B, 5,000 naira for each subsequent month in which the failure continues. So please that this remains unchanged with the Finance Act of 2019, 2020, and 2021. So it is important to also know that a person who connives to commit the above offenses shall be deemed to be guilty of the offense and shall, on conviction, be liable to a fine of 100,000 naira or imprisonment for 2 years, or both such fine and imprisonment. Are we together? Okay. Now, application for extension of time of filing returns. Application for extension of time application for extension of time of filing returns. A company may apply in writing to the board for an extension of the time within which to file returns, provided such request is made before the expiration of the time specified for making the returns, and the company shows good reason for its inability to comply. Now, expectation from banks in filing of returns. The banks are also expected, in addition of filing financial statements, to submit a return within 7 days after the end of each month, specifying the names and addresses of new customers of the bank in respect of the preceding month. What are the documents required to be submitted to the relevant tax authority when sending the first returns? These include copy of the certificate of incorporation, certified true copy of the memorandum and article of association, letter of appointment of external auditors and tax consultants, and letters of acceptance, certified true copy of Form CAC, particular of directors, capital allowances and tax computations, audited financial statements, and other information on date of commencement of business, accounting year end, registered address, business address if different from the registered office. Are we together? Okay. Now, let's take the pre-operational levy. Pre-operational levy. This applies to a company which is there to commence business after at least 6 months of incorporation. After at least 6 months of incorporation. So the levy payable for each year it obtains a tax clearance shall be 20,000 naira for the first year and 25,000 naira for every subsequent year before a tax clearance certificate is issued. Please, for example, purpose, this remain unchanged. Okay, but with the introduction of the Finance Act of 2019, from 2020 year of assessment, for every new any new company that now applies for tax clearance prior to its commencement can have their tax clearance without the payment of pre-operational levy. Are we together? Okay. So now let's look at type of assessments in Nigeria. In Nigeria, we have different types of assessments, namely self-assessment, provisional assessment, and best of judgment. So for self-assessment, a taxpayer can compute the tax payable for the year of assessment, file the returns, and pay the tax due. Such payments can be made in one lump sum or in a monthly installment, not more than 6. Okay, such payments can be made in one lump sum or in monthly installments, not more than 6. Suffice it to say that the taxpayer can forward it with the returns a bank certified check for payment of the whole or part of the tax due. However, the request for installment payments must be made and accompanied with a bank certified check. However, the request for installmental payments must be made and accompanied with a bank certified check for the first installment. Self-assessment scheme, if well implemented, is a subtle way of increasing tax revenue base of the government without coercion. Without coercion. Now, so let's look at the merits of the scheme itself. Yes, it enhances the pace of the tax collection as there is no need to wait for the computation, processing, and raising of assessment. It is democratic in nature as the taxpayer is allowed to participate in assessment. It gives the taxpayer a sense of belonging and responsibility, thereby making him more responsible citizen. It reduces the cost of collection by shifting the cost of collection to the individual taxpayer. The limitation of self-assessment scheme include There might be lower compliance rates. Okay, there might be lower compliance rates as a result of high illiteracy level in the country. There could be high level of understatement of tax liability due to a high degree of desire to evade tax in Nigeria. Are we together? So now let's look at the provisional assessment. This is made where a taxpayer has not delivered a return and the board is of the opinion that such a company is liable to pay tax. In this case, the board may determine the amount of the total profit of such taxpayer and make assessment accordingly. But such assessment shall not affect any liability otherwise incurred by such a taxpayer by reason of its failure or neglect to deliver a return. So likewise, the board can make an assessment upon a taxpayer for any year before the expiration of the time within which such taxpayer is required to deliver a return or to give notice. However, any taxpayer that disputes the assessment may apply to the board by notice of objection in writing to review and revise the assessment. Such application must be made within 30 days from the date of service of the notice of assessment and must contain the grounds of objection, the amount of assessable and total profit, and the amount of tax payable. It is pertinent to state that provisional tax is still a statutory provision of the tax law, but no longer relevant as every company is now required by the provisions of Companies Income Tax Act, Cap C21 LF, Law of Federation of Nigeria 2004 as amended to file self-assessment return and pay the tax stated thereon. Self-assessment filers are expected from payment of are exempted from payment of provisional tax. It is pertinent to state that provisional tax is still a statutory provision of the tax law, but no longer relevant. Are we together? Okay. So we have additional assessments. This occurs when the board discovers that any taxpayer liable to tax has been assessed at a less amount than which ought to have been charged. The board may, within a year of assessment or within 6 years after the expiration thereof, assess such taxpayer at such additional amount as ought to have been charged. Such taxpayer can, however, appeal. Then we have best of judgment, where the taxpayer has filed its financial statement and returns. Okay. The tax authority may refuse to accept the return and, to the best of its judgment, determine the amount of the total profit of the taxpayer and make an assessment accordingly. Okay, so best of judgment assessment can also apply in a situation where a taxpayer refuses to make available financial statements and books of accounts to the board or any of its agents for the purpose of assessment. Then let's look at the tax clearance certificate in Nigeria. A tax clearance certificate is issued whenever the board feels that the tax assessed on profits or income of a taxpayer has been fully paid or that no tax is due on such profits or income. This certificate should be issued by the board to the person within 2 weeks of the demand. If not, the relevant authority must give reasons for the delay or denial. Contents of a tax clearance certificate. The following shall be disclosed in a tax clearance certificate in respect of the last 3 months. In respect of the last 3 years of assessment. 1, name, address, and taxpayer's identification number of the company, total profits or chargeable income, tax payable, tax paid, tax outstanding, alternatively a statement to the effect that no tax is due, nature of business, type of assessment, best of judgment, self-assessment, etc., and expiry date. Are we together? So what are the transactions requiring presentation of tax clearance certificates? Do you have any question? In the absence of none, so let's continue. Transactions requiring presentation of a tax clearance certificate. Any ministry, department, or agency of government, or any commercial bank with whom any person has any dealing with can demand from such person a tax clearance certificate of 3 years immediately preceding the current year of assessment in the following transactions: where the company is applying for government loan for industry or business, registration of motor vehicles and change of vehicle ownership, application for firearms license, application for foreign exchange, application for certificates of occupancy, application for awards of contracts by government and its agencies, application for trade license, application for approval of building plans, application for import or export license, application for plot of land, application for pools or gaming license, application for distributorship, application for stamping of guarantors form for Nigerian's passports, application for registration of a limited liability company of a business name, application for allocation of market stores, stamping of the statement, the nominal share capital of a company to be registered, and any increase in the registered share capital of any company, stamping of statements of the amount of loan capital, application of transfer of real property, and appointment or election into public office. So ministries, departments, and agencies and banks are required to verify tax clearance certificates submitted to them with the issuing relevant tax authority. Are we together? So now let's look at the introduction of ethical issues. Okay. The administration of companies' income tax and personal income tax in Nigeria is vested in the Federal Internal Revenue Service Board and the State Internal Revenue Service Board, respectively. So the officials of these relevant tax authorities, as well as the tax practitioners, are expected to regard and then deal with all documents, information, returns, and assessments with utmost to regard and deal with all documents, information, returns, and assessments with utmost confidentiality, and there should not be any conflict of interest in the performance of their duties. So that's a brief of the ethical issues in tax feed. So we have penalty for failure to fulfill obligation of secrecy. A person shall be guilty of an offense under the obligation of secrecy if he communicates or attempts to communicate such taxpayers' information to another person. That is, such person will be said to have breached the principle of confidentiality. Are we together? So what are the conditions for disclosure of information? Information on taxpayers may be disclosed under the following conditions. One, if information is necessary by government for purpose of double taxation relief, and if information is required by the Auditor General of the Federation or any other officer authorized by him for the performance of his official duties. Note that no employee of the tax authority is expected to produce in any court any return, document, or assessment, or to divulge or communicate to any court any matter or thing coming under his or her notice in the performance of his or her duties, except as may be necessary for the purpose of instituting a prosecution for any offense committed in relation to any tax on income or profits in Nigeria. It must be noted also that it is only in the name of the board that proceedings for an offense against this obligation for secrecy can be taken. The consent of the Attorney General of the Federation must be sought before such proceedings can be taken in any other person's name. Are we together? Okay. So now let's take conflicts of interest. A tax practitioner is not expected to act for two opposing parties. Notice of any attempt to do this must be sent across to the parties to seek their consent. Suffice it to say that the service of a tax practitioner to a party must not be performed at the detriment of the other clients having the same interest in a tax issue. Are we together? Okay. So we have the payments of minimum income tax in Nigeria. So, and the conditions are that when a company has no profit, has no total profit as a result of the capital allowances and losses incurred, such company will be exempted from payment of minimum income. Such company may have to pay minimum income tax. Okay, and the company must have carried on business for not less than 4 calendar years. And then when the minimum tax liability is higher than the tax liability arising from the normal tax computations, the company will pay minimum income tax. Are we together? So that's that. And then for condition, there are limitations to the payment of minimum income tax. The limitation of this tax is that some companies might be forced to pay tax liability from their capital, thereby limiting their growth, because the company has incurred loss already, but still we still ask the company to pay minimum tax because it is no longer within the first year of commencement. Okay, so and we have the basis of computation of this minimum income tax, which is stated in this note. Okay, so in the case of a company's computation is based on whether the taxpayer has a revenue over 500 and below or a revenue of over 500,000. So a taxpayer with a revenue of 500,000 and below pay the highest of 0.5% of gross profits, or 0.5% of the net assets, or 0.25% of paid up capital, or 0.25% of revenue for the year. And in the case of companies with a revenue of more than 500,000 naira, it is the minimum tax calculated as in situation of companies with 500,000 and below plus actual revenue less 500,000 multiplied by 0.125%. Are we together? So now let's look at the structure of tax administration in Liberia, the membership of the revenue agencies governing board and their functions and powers. So you won't be able to go into detail as regards the structure of tax administration in Liberia. So, but we take this in brief. So we have the time and place of filing and payments of tax. So, just like every other country, and timely payments and then filing of tax is very, very important. Okay, so timely filing and payments of tax before the due date is very, very important, and it should be accompanied with the evidence of a payment. And the due date for filing, okay, is what is 5 p.m. on the date provided in the code under the personal and business income tax. Okay, and then for the service tax, is 5 p.m. on the date provided in the code under the goods and service tax. So also, just like we have it in the Nigerian tax law, there's also extension of time to file return. So, but this will be upon application in writing by a person required to file a return under any provision of the revenue code to the minister. Okay, so also we have extension of time to pay tax, and this will also be upon application, okay, in writing by a person liable for tax under the revenue code to the minister. Are we together? So also we have designated place for filing and payment. The designated place for filing is in Morovia in the minister's office, except where the minister grants the person to make the payments in such other place as may be determined by the minister. Are we together? Okay. So, and also we have a penalty for late filing or failure to file. So, okay. So we have discussed this in brief during the class. So we have the late filing penalty, we have the failure to file, and then so on. Okay. So, and for tax return, for tax required to be collected on imports, on the import of goods for which a custom consumption entry is required, evidence of payment of any tax required to be collected on import is sufficient to satisfy the return filing requirements with respect to those goods, and the custom consumption entry form is evidence of the amount and type of tax paid. Are we together? So, and penalty for late payments of tax or failure to pay tax. So we have the late payments penalty, and then we have a penalty for late payments, which we have discussed briefly. But for more information, you can go to your study test. And because of time, we're not able to go go deep into this. Okay, so we also have penalty for failure to pay tax. We have tax return for tax required to be collected on an input. Are we together? So we equally have the duties of the minister and deputy minister for revenue. We have discussed this earlier in brief, but you can, if you want detailed knowledge on it, you can go to your study test for detailed knowledge. Are we together? So, and then we have right of appeal. The taxpayer has the right of appeal, just like in every other tax jurisdiction. So, okay, so in Liberia too, the taxpayer has the right of appeal to appeal a determination of the minister to the board of the tax appeals, provided that the taxpayer first pays the tax due or provides the bond or other security for payment. So if a taxpayer has appealed a determination, the minister may not enforce that determination until the decision of the board of tax appeal is final. Are you together? So we also have the board of tax appeals, just like we have it in Nigeria and Ghana, and the composition of this board of tax appeal is 7. Okay, so it has 7 members, and they are all appointed by the president. Okay, so they are independent of the ministry, and it is administered under the authority of the ministry. It has the authority to approve, modify, or reverse a determination, and the ministry or the taxpayer may appeal an unfavorable decision to Liberia Tax Court, provided that the appeal is lodged within 30 days and is in conformity with the rules of the court. Are we together? So the composition of the board, like I mentioned earlier, that they are appointed by the president with the concurrence of the Senate for a term of 5 years for no more than 2 consecutive terms. Members must meet the following qualification: must have a university degree, must have experience or training in at least one of the following areas: law, accounting, banking, business administration, finance, or economics. At least 3 board members out of 7 must be lawyers. Are we together? So we have the hearing of appeal. A person who objects to a determination by the minister with respect to any tax under the Revenue Code, including the amount of tax withheld in accordance with any withholding provisions of the code, or who objects to the seizure of or confiscation of goods or accounts carried out in the tax collection process, may appeal to the Board of Tax Appeals for a review of the minister's determination. Are we together? So under the assessment procedure in Liberia, we have the general rule, amendment of assessment, assessment date, period of assessment, notice of assessment, payments of tax under assessment, and then turnover assessment. Okay, so we have discussed this in brief, but if you need more explanation, you can go to your study test. So thank you for coming to class today. We have successfully come to the end of this class, and in today's class, we have discussed the tax system both in Nigeria, the tax administration in Nigeria, Ghana, and Liberia. So the tax system in any country depends on the political structure of the country. Countries have their unique tax policies, tax laws, and system of tax administration. In Nigeria, for instance, the tax laws allow all tiers of government to establish their own tax authorities. The administration of taxes is therefore vested in various tax authorities, depending of course, on the type of the tax under consideration. On the other hand, in Ghana and Liberia, there is a central government, thus all taxes and duties are administered by central government. Are we together? So you guys can attend to the multiple choice question we have here. For question 1, the correct answer is, because of time, I will allow you guys to work on the multiple choice questions and the short answer questions. And I have an assignment for you guys here, 1 to 6. Okay. Wish you guys a successful diet ahead. Do have a wonderful week ahead. Thank you. Goodbye.